So you may have taken a look at your portfolio recently and wondered to yourself, why do I even hold all of these different investments? What do they all mean? Are they doing well for me? Well, hopefully yes, but what is the plan behind them, and are they helping me achieve my goals? Well, in today's episode, we're going to talk about diversification, what it is and what it isn't, as well as what we want to make sure it means for us as we're working towards financial independence. Hi, I'm John Norberg, and welcome to the Financial Prof series. So, diversification is a word that gets tossed around quite a bit in the investment industry. What does it actually mean, and how do we know if we have it? Should we even have it? Let's talk about it. What is diversification? Well, let's start with what is it not? Typically, diversification is not having all our eggs in one basket. Easy example. I'm going to pick on gold. Not that it's a bad investment, but let's talk about what happens if we put all of our eggs in the gold basket. So if we put $1,000 into gold back in 1980, and then fast forward to present day, early 2024, we would have roughly $3,000 or so. Not bad. We've tripled our investment, right? But what happens if we took that same $1,000 and put it into the S&P 500, which tracks about 500 stocks across multiple industries here in the United States? Well, that well-diversified S&P 500 would have returned enough to where we would end up with well over $100,000 based on that initial $1,000 investment back in 1980. Pretty big difference. So, diversification is not having all of our eggs in one basket, right? So what is it actually? Well, there was a study done some years ago by some very smart professors and economist types who were trying to figure out what exactly does diversification look like from strictly a stock market perspective. And what they found, and they looked at reams of data to come to this, they figured out that if your portfolio holds at least 50 stocks or so, it's probably going to be fairly well correlated with the market as a whole. What does that mean? That means that your 50 plus stock portfolio would probably rise at about the same time and to maybe relatively the same rate by which the market does, and it would fall in an opposite manner. When the market goes down, your portfolio would probably go down. Whereas let's say you held just one or two stocks, your portfolio could be way up on a market day that's way down, and vice versa. So if we don't want to go buy 50 stocks and keep track of 50 different companies, a really easy way to do this is through mutual funds or index funds that are a basket of stocks or bonds or whatever the investment might be. But if we hold, say, 5, 10, 15, 20 plus mutual funds or index funds in our portfolio, are we diversified? Maybe. Maybe we're even over-diversified, or maybe we're under-diversified. A common mistake that I see coming across my desk is a statement that has a ton of growth funds in it. If your fund says growth, that probably means it invests in heavily tech-oriented stocks, examples being Microsoft, Google, Amazon, etc. Now, these stocks have had a really good last decade or so, but there have been times in there, and I'll give one quick example, which have not been so good. 2022, for instance. Tech stocks had been on a hot tear, going up through the roof, and then 2022 rolls around, the Fed says they're going to start raising rates, and those tech stocks plummet. The NASDAQ, which tracks largely tech-oriented stocks, was down by about a third that year, which underperformed the S&P 500, by the way. So you want to make sure that not only are you diversified from a single investment perspective, but that you also have a good handle on what do those individual funds invest in, and do I actually hold, less stocks when I break open those funds than maybe I should if I'm trying to achieve true diversification. All right, the biggest mistake that I see when it comes to diversification, it's not having a plan. If you have all of these different funds, plus maybe a business on the side, what are we doing with them? What is the plan behind them? Why do I hold them? Well, this can differ for each person, and maybe you're taking too much risk or too little risk in your portfolio to achieve your goals. You won't know unless you know what your funds are doing and you have a plan behind them. So maybe your plan is ultimately retirement. Maybe your plan is to grow your business as quickly as possible and then sell it, in which case, maybe you don't want to be investing into a retirement plan at all, but rather pouring everything into your business. believe it or not, there are times in life where this can actually make a lot of sense to do. But if you're wondering to yourself, what does it actually mean? What's the plan behind my investments? Because I really don't feel like I have one. Make this the year where you put a financial plan in place to govern all of your finances and help you get closer to what it is you're trying to do in life. Drop us a line, give us a call. We're happy to sit down with you, take a look at everything across the board, and put in place a comprehensive financial plan that's going to take into account your specific goals, your specific risk tolerance, and make the changes we need to help get you closer to there. Thank you for watching, and in the meantime, I'll see you out there.